I'm going to see how my thesis gets tested, but my guess is the ones that win, the early stage ones that win this cycle of the quality projects, like Solana was last time or ETH was the time before, will all be low float. Maybe there's one that isn't, but it's just very hard to beat a low float, because I've seen this in markets themselves, in traditional markets. You've got a low float equity, you bring in one large buyer, it goes bananas.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Raoul Pal explains what the future of crypto adoption looks like, his prediction for Bitcoin price, and much more.
I've also been thinking through these low float tokens, and one thing that I think firstly is now the market discounts them, so therefore you get a good shot in the liquid markets to make a decision, because the decision I think you've got to make is the supply is known. So that's off the table. In typical market, unknown supply, unknown demand, that's complicated. Known demand, not known supply, you can model something, and the reverse side. So I look at these and I know what the supply is going to be, because we've now got the unlocks. The tokens have been discounted because low supply. And then what you know is, well, if demand does come, the beta of a low float is gigantic. And I think it's going to crush everybody's understanding of what low float means in this bull market, and they'll all be wrong. And they'll be wrong because limited float, but good demand, because some of these are really great projects, will create really asymmetric risk rewards. I don't think anybody understands this, because they think future token unlocks always mean the price under pressure. Yeah, in a bear market, they'll probably go down more than others. But in a bull market phase with a very small float, I think this is very interesting. And I guess they're all going to outperform. Now, one of the things that, I too was class of 2013 with Bitcoin. One of the things that I saw in it immediately was the game changer in terms of both capital formation and kind of aggregation of interest of people is the behavioral economics side of this thing. Because, you bring people into a network and the token value goes up because of Metcalfe's law, increases the value of the network. And that allows you to bootstrap businesses really fast. And I still think that hasn't been fully yet understood by people in what that means. Yes, we see some perverse incentives now, airdrops or sort of ways of farming it. But I think the ICO thing was the start of something much bigger, but we've got to get back there again.
Warren Buffett's Berkshire Hathaway is now almost worth the entire Bitcoin market after its valuation crossed $1 trillion. Berkshire Hathaway's stock rose 0.75% on August 28 to push its valuation above the $1 trillion mark. The stock has rallied by over 29% so far in 2024, surpassing the S&P 500 index's 17% rise and trailing Bitcoin's 31% gains in the same period. Bitcoin's market cap is $1.18 trillion as of August 29. The minor difference between Berkshire Hathaway's and Bitcoin's year-to-date returns illustrates an interesting point. Despite Warren Buffett's well-known aversion to cryptocurrencies and Bitcoin rat poison, his investment strategy has pretty much matched Bitcoin's performance in 2024. In other words, Bitcoin holders are doing just as well as the Oracle of Omaha. Meanwhile, Berkshire has achieved impressive 2024 profits through its diverse portfolio of businesses spanning insurance, energy, manufacturing, retail, and services. These segments delivered $22.8 billion in profit during the year's first half, marking a 26% increase compared to last year. Buffett has no plans to redirect his cash holdings to Bitcoin, despite the latter's growing relevance as a financial asset, especially following the launch of Bitcoin spot exchange-traded funds, ETF, in the U.S. in January. Berkshire Hathaway stock has consistently underperformed Bitcoin in the past decade, dropping 99.98% since its 2011 top versus BTC/USD. According to results from the Nakamoto Portfolio Simulator, incorporating even just 1% Bitcoin into Berkshire Hathaway's existing portfolio, with its top stock holdings including Apple, Bank of America, and American Express, could have boosted returns from around 185% to 207% on a 5-year adjusted timeframe. Moreover, allocating 5% 10% of the portfolio to Bitcoin could have achieved impressive returns of 130.97% to 279.64% for Buffett in the same period.
Now, many of you know I've been in the hedge fund industry for 30-odd years. At first, I used to speak to the biggest hedge funds in the world and advise them. That was my role at Goldman Sachs, where I ran that business, advising the world's largest hedge funds and obviously executing their trades. Then I moved across to one of the largest hedge funds in the world, GLG Partners, where I started and ran the Global Macro Hedge Fund. Back in 2004, I opted out of the rat race, moved to the Mediterranean coast of Spain for quality of life, and that's where I started Global Macro Investor, my kind of premium research service that I write today, 20 years later. And that, again, is read and aimed at the world's biggest hedge funds, sovereign wealth funds, family offices, high net worth individuals. The hedge funds have been my lifeblood. I speak their language. I live that world. Many of them are my friends. One of the reasons I also built a business around this called Exponential Age Asset Management is because I think hedge funds offer the great opportunity to capture the alpha in markets. You see, the crypto markets are going to go from, I think, $2 trillion where they are today to something like $100 trillion by maybe 2032. That's an enormous rise, and we won't capture it all by just focusing on Bitcoin, Solana, and Ethereum. We need to be able to move further out the risk curve, but that's bloody hard. It's not something I can do. This is what hedge funds are really good at. They do this. They spend all of their time looking for alpha, looking for opportunities. So I find speaking to hedge funds super rewarding because these guys have capital on the line. They not only have their own personal capital, they also have investor capital. So their job is to focus on the best opportunities in a risk-adjusted return basis. I don't disagree, although I'm almost 100% sold still currently. But for me, I've been thinking through this layer 2 versus ETH. And I'm not sure the market's got this right yet. I think people think they're parasitic because you take activity and you only use a small amount of the underlying ETH. But I think ETH is valued, and why ETH is more valuable currently than Solana is because it's valued by Metcalfe's law, the network value, and the L2s are included in the total value transacted. And if you look at the number of applications built on Ethereum, it's still larger. When you take into account the layer 2s, the activity is still vibrant. So I'm not entirely sure we yet know, and I could be dead wrong here as well, but how to value this or what the market's actually telling us yet, because I think markets are actually quite efficient at pricing this stuff. But either Ethereum really starts sinking from here, which it's been doing over the last few months versus others, or we're not fully understanding what is being built, because I think we all believe in this multi-chain world, so it's just, the pie grows, so it's not like one necessarily versus the other. What do you think about that? Think about the layer 2s in the value accretion. Where does the value accrete? I mean, because we've also seen the base has shown we don't even need a token for a layer 2, which is another interesting thing.
Bitcoin dropped below its critical 200-day EMA for the third time in August this week, and below the psychological level of $60,000. Its recent correction from $65,000 to $58,000 has further opened the possibility of a potential swipe of the recent lows. So how low can the price of Bitcoin go in the near term? However, the possibility of an immediate recovery from $58,000 is questionable since the market is approaching September. Historically, this month has the lowest PTC return on investment, ROI, average in the past decade. The bears will argue that this history will likely repeat, since most investors know this and expect further drawdowns in the next few weeks. A drop down to $49,000 for BTC would mean another 18% correction over the next few weeks. On the weekly chart, the correction on August 6 tested a long-term order block between $47,000 and $50,500. Upon a potential retest of this major order block, Bitcoin will also receive support from the 50-day and 100-day EMA levels. This price range is also supported by BTC volume. As illustrated, the number of addresses holding 2.33 million BTC is currently 6.39 million. The average BTC was bought around $44,000. Hence, price levels above $45,000 offer strong historical support areas for Bitcoin, which should ideally be the last line of defense before Bitcoin undergoes a bullish recovery in Q4. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.